and me, John Catrone. We meet regularly, three friends, three traders who are trying to make sense of markets and finding setups, sharing it here. So let's dig in. We like to start with big asset classes, big picture. Uh, no better place to start than Bitcoin. We're back in the mid 60Ks. Um, this is this is kind of what we've been saying the last few weeks, which is, you tend to get this. Last week I mentioned the July scam pump. I think this is what we're seeing. I still think the lows are in the 50s. Some people feel differently, but I'll kick it over, Alex, to you. What are you seeing?
I think we're seeing a market where like no one really cares about it anymore. The action is somewhere else. That's why we're seeing volatility compression, just horrendous sideways price action, as you can see on the chart here. Especially when you start zooming in and go on the lower time frames, it's just hell, like out there. Like this is basically, anyone who's trading this just getting fucked like over and over again, basically. 2% ranges for like a couple days, and it's gonna move up or move down for like a while, and then mean revert again. Just a really bad trading environment. I think one thing to note is the small tantrum or bigger tantrum that the market threw when when there were concerns about MSTR, having to sell Bitcoin, and then they finally sold some Bitcoin. Those concerns seem to have vanished, at least for the time being. I think we've just priced in a lot of that perceived selling, and now we're kind of like just stuck in this in between kind of like price range where I guess there's some people still being worried and not willing to buy, but on the other hand, you are seeing some absorption around 60K, and there seems to be some institutional capital willing to bid these prices. So my guess is until we get a catalyst, we're gonna be stuck here for could be like a couple months. Until like either we get some more action from Saylor, or there's maybe a potential macro catalyst, maybe like a Fed pivot sort of thing. But yeah, that's kind of my view currently.
Mike, what do you think? You're on mute.
Hello?
Yeah, you're back.
Okay. No problem. I think this week was pretty interesting. Market reacted pretty strongly, BTC, to sort of like what we saw with the CPI and I think PCE as well. Those were pretty positive prints, but yeah, I think lack of momentum is sort of definitely the headwind. And not lack of momentum, but lack of narrative is the headwind, because there was literally no follow through, like no momentum. We traded, above the previous week high. We couldn't maintain it. Like today, it's just sold off again. And I guess like the other thing that's a bit difficult is just, we've also sort of picked up this correlation in the Asia session, which doesn't really do BTC any sort of like favors in regards to momentum, where it's just for some odd reason, like during Asia session, a bit more low liquidity, where BTC really clings on to what's happening in the Kospi, and I think it just also just speaks to the fact that without a narrative, you're just gonna see BTC hang on to anything, and that's definitely gonna stifle momentum over time. So yeah, I tend to agree with Alex in terms of we'll probably just experience more sort of this choppy action where it's like, one thing will pick up price, another thing will sort of, bring it back down, and those are sort of the perfect conditions for more chop.
Wow, look at the Alex, you just pulled up this chart. I'm kind of blown away. This is the same chart.
Yeah, pretty much. It's obviously Hynix is a lot more volatile than Bitcoin at this point, but
yeah, except for that one nuke in the middle there. Wow.
yeah, just shows you how like memory and chips are like basically the proxy for like all risk assets at this point, and are just driving like most of the market, right?
Yeah, it's a good point. Yeah, BTC is, I mean, I always come back to seasonality here. I think we're just sort of just doomed to repeat 4-year cycle theory, unfortunately. So I think this all just kind of just plays out like it always does, and we're here just like pontificating about why. So my base case is that until we see something different. So I think it's just going to be a choppy summer in the 60s. And then again, I think you set your stink bids somewhere kind of in the 50s, and you get that somewhere end of summer. And I don't know why. I don't think it even matters why. I don't think it's going to be Saylor like puking up anything. I think all those fears have gone away. It's going to be something something like what we talked about last week. You get some, I don't know, some firm blows up, or you get some Fed pivot, or the stock market corrects 10%. Just something to set a liquidity cascade. We've already dipped into the 50s before. Like hitting 55 or 50 is going to be like nothing. So I think we don't end the year without seeing that, basically. But like I said a few weeks ago, around 60, we did one of our pods around 60K. Great place to just start DCAing, right? I think just if you just bought every week from now to the end of the year, you're going to do great. Because we all believe that Bitcoin in a more normal environment, let's say next year, the year after, can easily get back above 100 and even 200K. So yeah, that's how I'm seeing it. And then to me, like, I think about what's on my shopping list, right? And BTC is on my shopping list. I think I don't own any hype. I probably want to own some hype at the bottom, maybe some ZEC, maybe some Canton Coin. These are coins that have shown some strength this year, and that have real revenue and institutional narratives behind them, or privacy narratives behind them. And I think I see those more as trades, just off the bottom. But what do you guys have on your shopping list for, if we are to get some final capitulation besides Bitcoin?
Yeah. I'm actually slightly interested in Ethereum again.
Oh, man.
And that's that's the first time in like, I don't know when, like 2021 probably.
Well, you and I were trading bull spreads a year ago.
That I think that was around the time when Tom Lee was buying, right?
Exactly. We absolutely printed on those.
Yeah, that's right.
It ran from like, I don't know, under 2K to like 4K in like a couple months.
Yeah, that pump was golden. It was so easy to play.
I don't know if we'll ever see that again, to be honest. I don't know. But yeah, what do you see?
I'm seeing, and like that usually ends badly, but I'm seeing a bit of relative strength from ETH. It's slightly broken out of this like a little range that it had formed here at the bottom, and it's obviously like nothing major here, but it looked like to me that there's been some sort of bid over the last like 1 to 2 weeks, mainly resulting from the Robinhood chain launch. It seems like just Robinhood launching this L2 thing, and it feels like it could bring back the whole tokenization and like ETH being sort of the mothership where around which like all the tokenization is gonna be built. That's it's at least felt like that could make some sort of comeback again, and that coupled with bit of relative strength, it at least makes me want to look at ETH again. I'm not positioning here or anything, but if the strength continues, it could be interesting to load up on ETH again. Yeah.
To me, like it would only make sense viewing it as like a meme coin, like Pepe or something. Like that's literally how, you know, I was like, I wasn't an ETH maxi at one point, but I really did think a lot of, I thought Ethereum was gonna help modernize finance, and I now see that it just can't. I think it's going to make a lot of sense for offshore use cases and for non-financial use cases. But I think the majority of large U.S. institutions just, can't be on an open permissionless chain with their customers' data and trading against their competitors. So yeah, I think there's going to be a lot of interesting kind of like retail use cases or social use cases. I think like Robinhood chain is like kind of very uninteresting to me, and it's all just like pay to play stuff. But yeah, I think like as like in the way that you look for a meme coin to be the highest beta, like tool on whatever belief you have, wherever the market's going, I think ETH's going to pump way harder than Bitcoin if we do get if Bitcoin rallies back up to 80K, ETH is going to do way better.
Yeah, probably. Michael, I think you were also a ETH maxi at some point, right? Like during the DeFi era.
I mean, yeah, I was definitely an ETH maxi. Yeah, I think ETH. I think it could have done better this year, just based on what's happening with stable coins, and it does still seem like that's probably like the home for that sort of narrative. But yeah, I mean, ETH it's really sort of like underperformed. At least now it's finding some strength. But yeah, I don't really have like a strong bullish case for it at the moment. It's a full price, so I guess yeah, nothing really on ETH. I do think I am really liking what's happening. If we're just keeping on sort of like altcoins, I just think keeping your eye on sort of like your hypes, Lido, sort of just these platforms that are going into sort of providing derivatives, decentralized, no KYC products. We've seen that sort of like how nicely capital and OI can sort of like transfer based on narrative, and it's been creating amazing opportunities. So I think just picking up tokens that are going to capture this like narrative is pretty fantastic. So like Hype and Light are pretty cool, and any other sort of like interesting exchanges that can come up. I think you can sort of like keep an eye on like Robinhood chain. I think they are trying to sort of like cross list their products as well, so that should be pretty interesting.
What are we thinking about like all the perp dexes and like their longevity going forward when it comes to like regulations and stuff? Because like they've obviously been benefiting from not doing like anything on a regulatory front, not getting any licenses and
Mhm.
basically operating as unregistered, illegal markets. Are the incumbents like CME that they're gonna, and I think they're already starting to do that, they're gonna come for them, right?
They're absolutely going to come for them. Yeah. They've already the CME has already filed a suit against the CFTC on their recent perp rulings. And I mean, it feels like a bit of a desperate thing to do, but yeah, I don't think the base case should not be that anything today lasts, because just think about every cycle, there's just like a new set of names. And with the exception of like Coinbase and Binance, which are the incumbents, for crypto, I none of this stuff lasts. And so, will Hyperliquid be around for offshore, more retail use cases? Absolutely. Or not absolutely, but I think they have a real shot. But they can be displaced like that by another sexier perp dex. We're already seeing this with Lighter, right? And you're seeing Binance take market share from Hyperliquid. Now the pie is growing, but the Hyperliquid slice of the pie is getting smaller. So everyone's business is growing, but their share is getting smaller. Binance has like 1 billion KYC accounts. So KYC. So they're I think Coinbase, Binance, CME, these guys are very, very well positioned to own perps. And I'm more bullish, and where I'm looking for is who is positioned to benefit from U.S. institutions compliantly being able to trade these types of things. And Hyperliquid is not in that camp at all. They are completely illegal to use in the US, despite people finding a way to do it anyway. So, and then even everything you're seeing, Robinhood Chain, Lighter, everything you're seeing with like on-chain stocks, this is all outside the US. Almost like 99% of it. All right. All this cool stuff that you're seeing. Oh, Robinhood's doing this, Coinbase is doing that. That is 100% offshore.
Mm-hmm.
So to me, the alpha is find the companies, the tokens that are doing something that can work onshore compliantly, ideally for bigger pools of capital.
Yeah, that makes a lot of sense. I just pulled up the CME group chart. That thing sold off quite a bit. It seems like that could be related to perp dexes and some fear around that, but I mean that kind of looks quite attractive to buy, because I don't think CME volumes are down in any way. So if CME can capture some of the perp volumes, I think they are in the process of launching like 24/7 markets for all their available pairs. I can only see volumes continue going up for CME, which they have for like last decades, basically.
Yeah, this looks like kind of a good buy here.
Yeah,
and then maybe I don't know. I'm not a technical analyst here, but I don't know. I don't know where the right entry point is here, because it's already bounced pretty hard. But just this feels like an overreaction.
Yeah.
So do you guys want to talk about equities?
Sure.
Can you pull up DRAM versus Mag 7 or something close to that on the chart? I mean,
this is, so I have DRAM versus QQQ here.
Yeah, that's fine. Mag 7's like most of QQQ these days. So yeah, I mean, what you're seeing is a re-rotation. So the trade in the first half of the year was, what was it? Sell the people spending the money, the capex, and buy the companies that are receiving the capex, which is the chip stocks, the memory stocks, the data center stocks, whatever. And now you're seeing the reverse. Since the in the second half of the year in July, I think this is just like an overcorrection, and this is actually good. This is a very healthy bull market. I really love to see this because it means that there's like there's still some ration happening throughout the market. SK Hynix and all these stocks got way too high, and we have a nice healthy correction in these DRAM stocks.
Yeah, potentially. It does look nasty though, like, not gonna lie. When I pull up a lot of the high flyers of this year, it's let me pull up Hynix. Why is it so hard to find? SK Hynix.
Yeah, you had some good calls last week on our pod about SK Hynix. We were talking about the luxury market in Korea. Everyone getting rich, people leveraging their houses in Taiwan, and it's like every sign of froth you can imagine last week. So anyone who shorted that probably did pretty well.
Yeah, probably. Korean gamblers are they're hurting right now. Like, I saw like 1.3 million in retail accounts getting blown up in the last couple of weeks in Korea. So that's basically every 30th Korean getting margin called on their positions, which is just like not like 1/30th of traders, but like of the country.
That's nuts. That's nuts.
Yeah, and that's only by it's the price has dipped to a level it was at like 2 months ago. It shouldn't be like too major, but this move right here, that last 50-60% move, this is when everyone felt like a genius and levered up.
Yep.
So yeah, the problem I have is when I look at this chart, it looks so fucking similar to Bitcoin 2017.
Ooh.
I mean, it does really look like it.
All right, but so okay, I agree. I agree, but there's fundamentals. I mean, Bitcoin doesn't really have fundamentals, and I think there is some floor here. I don't have a strong view as to where it is, but I think that would be the difference. Is that I like to follow the tech. Like, I think we're gonna be kind of short on memory for the next few years, generally speaking. Like, there's not going to be like memory sitting on the shelves not used. It's just going to continue to get memory that gets produced is going to get used. Same thing with chips, and same thing with data centers. I think all this stuff is going to be. I think demand is going to be higher than supply for all those categories during this AI boom over the next 2 to 5 years. So that creates sort of a fundamental floor. Now the price can get way ahead of itself in the meantime. So to me, that's kind of a something that would offset this turning into multi-year bear market like after 2017 Bitcoin.
Yeah. I guess the bears would argue that the fundamentals have been deteriorating. I think you can pull up like a decent list of arguments at this point, probably. So you've had like on the memory side, like Apple has canceled a lot of their purchases of memory from Samsung, and just went for Chinese RAM instead, which actually marked the top on all these Korean high flyers. Then you have like some efficiency gains on the model side. Like Kimi just came out and just crushed it. And overall, this seems to be a bit of a fear just about the developments happening in China, and no one really knows how much like memory they got, but it seems like they're cranking it up. So that's why I think the market got spooked this week. And the bear argument now is fundamentals. Like we got way ahead and of ourselves, and fundamentals have been weakening underneath the hood. What do you think about that?
Yeah, it's such a black box in China. I know that they tend to make the picture look as rosy as possible, and so I don't know. I'm not. My base case is not that they have like all this, DRAM stored up. But yeah, I don't have a strong view otherwise. I do, a big topic is token pricing, and like, okay, what would pop this bubble? And it would be that, token pricing just gets so cheap because of these open source models, or because it just gets cheaper on its own. And then,
or if we just move a lot of the compute to like local.
Yeah. I just don't think we're anywhere near that. I think we'll get there. I don't think we're near that in the next, I don't know, year or two. So yeah, that's my take. Like I think all these things keep ripping. I think people still pay up for Fable and whatever's next. Yes, there'll be use cases for Kimi K2, and there'll be use cases for running these models locally. But I think anyone who's using this stuff daily knows that you need to stay on the frontier with a lot of use cases. So that's, I don't know. I think that also a lot of these. So the tokens are all subsidized, right? So that's one. And then two, all these open source models are also subsidized, right? These are like money losing things, and they're just doing it to catch up, right? To gain adoption. Like whenever you're like the underdog, you open source until you catch up, and then you open source, and then you start charging, right? We're going to see DeepSeek go public. I think these are all going to be these are all going to be the same business model, where they're just charging per token. So I don't know. It's tough to know where this stuff goes, but I think you need to generally keep exposure to it, at least for the rest of this year, because you have the political winds behind you, and it's hard to, I don't know, it's hard to be on the sideline during this sort of like tech revolution here. So I think just having exposure to the cues. Look, if you're a trader, I'm sure you could outperform that, or I'm sure you can find some interesting pairs trade. But I think just having exposure to the cues is probably a good idea for the rest of the year.
Yeah. I can't quantify it, but I kind of have the feeling like the Q is gonna pull like the same move that they did at the start of the year, like start ranging for a very long time. Do this kind of chop thingy here, then break down, and then we're suddenly just gonna see a violent
Yep.
final move up. That kind of how it looks like to me. Again on SK Hynix, I don't know, Michael, how you feel about it, but it's just so hard to look at this chart and envision it like going back to the highs and higher from here. Like it's just like how can like this chart be fixed? You know what I mean?
Yeah, maybe. Yeah, it does look like probably we get a chop, chop, and then probably puts in a lower high.
Yeah.
You know, as you guys were speaking about, you know, I think whenever there's sort of like these huge demand fundamental factors, there are going to be like suppliers that are going to come in aggressively to meet it. And yeah, I think if I was sort of like looking at this, because I still do agree with sort of John's point around you do want your exposure, right? And I feel like right now you're probably going to see sort of with these stocks like some form of like outright winner. I don't know if it's going to be SK Hynix, maybe it's going to be Samsung, but there seems to be like for me, it's like there's probably going to be like this one organization that's just going to absolutely do really well with it and is able to sort of like be the blue chip of this sort of like memory trade. So, I mean, that's the way I'm looking at it. But yeah, it's also the issue as well is just you know the amount of sort of like leverage and speculation that's been also getting into these I guess like these companies as well. I mean, that doesn't really help. You know, people are losing money. People are getting margin. It's like you almost sometimes it's like that first fuel that you had is now it's disseminated. So it's like, you know, is there enough like interest for this to, you know, pump again? Maybe through you know, S&P 500 inclusion, we'll see something interesting. But you know, as I said, it's still there needs to be like one blue chip. So I think it's just thinking, okay, who's actually out of these sort of like Korean stocks, who's got the best chance of you know getting included in like some form of like S&P 500 and is able to sort of like catch this bid, this forever sort of like DCA for 1OK like DCA bid over time. So that's just the way I'm sort of like looking at it.
Yeah, that makes sense. I mean, I guess it's good to look out for the rotations. This market really loves to rotate lately, so look out for relative strength. If I had to trade Hynix here, I'd like this is the KRX, which is closed today, but on Hyperliquid we're already trading at new lows. I would probably expect, since we're trading at new lows on Hyperliquid, that on Monday we're gonna get like a nice like leverage flush again. You know, the leverage ETF gonna have to sell a bunch. Some more accounts gonna get margin called. But that kind of looks like a buy to me then. So if we say like we're already trading here, right? Like if we trade down to like 1500, close this gap maybe, that kind of looks like a buy to me, like for a bounce back into the low 2000s, which is like, you know, 35%. Yeah.
What's like an interesting so you have the Order X UI pulled up here. What would be an interesting ARB with SK Hynix? You know, whether it's an equity perp ARB or are there any carry trades with SK Hynix that you guys are seeing?
Yeah, so we've been seeing a lot of the slightly more you know, professional traders on Hyperliquid who are also set up to trade SK Hynix. they've been doing the basically the carry trade funding rate arbitrages on SK Hynix by longing and shorting the perps on Hyperliquid and then buying spot on via their brokerage account. And these funding rates, they've been annualizing like hundreds of percent. So you can most of the time just hold the trade for like a day or two, but since the SK Hynix perp on Hyperliquid is just doing crazy amounts of volume lately, I think it's the second most traded asset on Hyperliquid right now. You can put on like decent size and like arbitrage these things quite nicely and just capture like a couple percent difference from between spot and the perp, and then collect the funding rate on top of it, which is amounting to some pretty nice APY. And as long as you manage your margin, it's risk-free.
Yeah. So very now I was also going to just add there that if you wanted to really catch on to it, this is like the best way. I always feel like if you haven't really caught the trade from a delta perspective, there's also these sorts of arbs. I feel the same way about like how we in the beginning of the year the interest was around like natural gas when they're on. Like when the Iran war really broke out, it was around like natural gas and oil. So yeah, I mean it's also sort of like, yeah, as I was saying, if you really want to catch on to these trades and you've sort of missed the delta move, like this is the type of thing that obviously requires a bit of, you need a brokerage account as well. And also on the other side, it's to sort of manage the deltas and allocate correctly without sort of like running like basis risk. It's a bit of a tricky trade to put on.
Yep, right. Like you definitely need some sort of automation built around it. So some basic setup with some execution, and which helps you to enter and exit these positions automatically. But yeah, when you have that, you can profit quite nicely.
What are any other carry trades? Is it mostly the equity perp arb carry trades that you guys are seeing, or is there any other ones?
Yeah, it's mostly the equity perp carry trades, which are just like really hot currently.
What's the APY that you're getting right now?
We're currently sitting at, I mean, it fluctuates a lot, right? Like we're currently sitting at -2 basis points per hour. Like 2 hours ago, we were at 8 basis points per hour. So you're probably averaging like around 2% per day. Yeah,
it's not bad.
I mean, it's really good.
Really attractive. Very, very attractive.
2% a day, man.
Yeah.
It ain't much, but it's honest work.
Yeah.
The other thing that's interesting that also happened, and this is something that I picked up on, sort of like when we had like this type of funding rate with commodities, is like like smaller sort of exchanges like Lighter and Extended. They'll also have like more ridiculous, so you can just you can sort of just run the ARB crypto natively, and you can still make money. So maybe Extended will be over. It will be a bit hectic, but the problem with this type of trade is like, Hyperliquid is just where the liquidity is at the moment. So I think Lighter's coming up a little bit, so you can. They even had some incentives to actually just boost liquidity. But yeah, the other issue is just figuring out, okay, if you're trying to run it through 2 crypto native exchanges, like where's the liquidity? How much liquidity is available? And then you don't even need to have like sort of a brokerage account to sort of like hedge the exposure.
Yeah. Right. It can also be quite profitable. You only need to monitor your like liquidation risk on some of these venues, especially on the very illiquid ones, like maybe not hyperliquid and lighter, but some of the more exotic ones, there are some shenanigans going on there sometimes, where if someone who can move a little bit of size sees like a liquidation cluster that might get hunted on the weekend when no one's watching, and you suddenly get blown out on a delta neutral trade,
Yeah,
which sucks.
that's so silly to me, because like that's just bad trader UX. And
Yeah.
to me, this is one of the structural disadvantages that any perp dex has on a open permissionless chain. Now, I think there's plenty of use cases for that, but if you're a serious hedge fund or a serious trader putting on real size, and you have like, come on, like you're not going to let yourself get hunted like that. You're going to find a privacy preserving option, and it doesn't have to be Coinbase or the CME, but there's got to be some other option. Yeah, and this goes back to your question, like how much staying power does Hyperliquid or these perp dexes have? Yeah, stuff like that just makes me think that we need to have more cycles, and that there's going to be more Hyperliquids.
Yeah. I'm actually quite after Hyperliquid launched their airdrop, like obviously everyone was super happy, and I was still very surprised by their growth trajectory, how they just managed to keep the momentum going and keep growing by this amount, because we've had perp dexes before. Like DYDX was probably the first one out there, which we've had in
Synthetics, GMX, all these
they're
ones.
all like 2020, 2021, coming out of DeFi summer. And still they managed to achieve this crazy amount of growth. And when you look at the underlying tech, I mean, it's interesting, but it's not, like, I wouldn't call it like institutional grade technology. It's not, like, it's not really suitable for HFTs. Like, we've been like on at OrderX on the product side, we've been integrating Hyperliquid, and frankly the infrastructure is not really great. Like, if you want to run like an actual like market making operation, it's gonna be tough, because you don't really have any guarantees. Like, things are kind of slow. You're always risking that you're gonna get bad fills from like stale orders and stuff, because just the blocks are not coming in quickly, right?
Yep.
So I kind of always wonder, like, the people who actually think like Hyperliquid could be like this global exchange that hosts like liquidity for everything. I kind of still have my doubts, just despite the growth.
to put it mildly.
Yeah.
I couldn't agree more. There's nothing. The most interesting things are just that they did a massive airdrop, and they had no VC funding, so it just worked, right? There was no like down only chart. It was bootstrapped by a team who really knew what they were doing. They built it for themselves, and they were already, they'd already made it, so they didn't have to extract value. And then, yeah, it's just a big reg arb, right? And that's the word interesting as like kind of a joke, because, it's just a big regulatory arbitrage, is kind of what their existing business model is. And I think they also took a more centralized approach back when it was very faux pas to do so, right?
Yeah.
2022, 2023, it was like, no, everything has to be like, World War III resistant. And they just put all their servers in one building in Tokyo and they made it feel like a centralized exchange. And it turns out that's what people want.
Yeah. Yeah, and they had the balls to launch equity perps, because like
Yes.
DYDX and like others, they had been around, and their product was like on par with Hyperliquid, but like equity perps were just this big unlock, it seems.
Completely. And then really, I mean, Trade XYZ is like half of, I think it's more than half of their volume now, right?
Yeah.
On Hyperliquid, like it's its own HIP-3 market, but yeah, like what you need is like a benefactor like Trade XYZ to go and just, like there's no one even close to doing what Trade XYZ is doing. So you need sort of like a partner to build on top of you, which is another kind of key ingredient to their success, right? Because now at Trade XYZ, you have commodities, you have stocks, you have all these kind of, RWAs that people talk about.
Right.
All right, let's wrap with Vol. What are Vol is cheap. People see this. Could get cheaper. If for folks who want to put on a Vol trade, what looks good here? I'll let each of you do your favorite options trade.
Okay. So chart at the top left, that's implied versus realized over the last week. So we're not trading at a discount anymore. So implied vols are not trading cheaper than realized, but we've like the spread has come in and we're like more or less trading at no premium nor discount, which is pretty much just a function of like realized not really doing anything, like even doing less like this week than I had the weeks prior. Yeah, my view kind of from last week just remains the same. It feels like vol in the low to mid 30s on Bitcoin seems to be a structural flaw. I don't think the market can realize less than that. Maybe we're gonna get a quiet August and see it drift like a couple points lower, like back down to 30 maybe on 1 month vol, but I don't see it going under 30. That just wouldn't make any sense whatsoever. So buying vol is is essentially the trade. Not looking too far out. So when you look at the term structure, bottom left, we are in strong contango. So we're seeing the front end trade in low 30s. Some parts of the curve trading in the low in the high 20s. But then when you look further out, you're still, you're seeing like 40s, low 40s. When you look at the December to next year June expiries, which then doesn't really look too cheap again. That's, if you're a delta neutral vol buyer in the 40s, I don't have a strong view if you're gonna make money or not. So
what's the trade?
The trade is you want to buy like monthly vol as long as it stays in this low to mid 30 range, and stay delta neutral and keep rolling that vol, and continue having that position on as long as vol stays around there. And at worst, I think you're gonna break even. But if the market moves for some reason and there's there's gonna be reasons and catalysts coming up, be it macro events, be it stuff around MicroStrategy and Sailor. The market is gonna move and start trending again, and that's when you're gonna realize some pretty nice profits, both on the realized vol side, plus on a potential volatility expansion when we get that move.
I like it. So more of a delta neutral trade. Mike, what do you think?
Yeah, no, I mean, not much has changed in terms of sort of my view, where it's like, because there's a lack of narrative, it's very, very difficult to sort of like position very sort of like long vol. You can get eaten by theta quite badly. But yeah, it does seem like, I guess, like in the middle of the curve, it is attractive to pick up something. I don't see us sort of like chopping for more than 2 months, right? And a vol expansion usually needs some form of like price breakout. So yeah, it does seem quite attractive to sort of like go for sort of like August, September, as sort of like a long, like, yeah, to sort of long, and then yeah, just buy like short sort of like front end when nothing really happens. I mean, even this week we had like CPI and PCE. We had quite a lot of like macro catalysts, but the market really didn't actually price some form of like event risk. So it almost even feels safe to short the front end for now, and just collect and just wait for some form of like bigger breakout. And I think invalidation is also pretty clear. Like, we lose 60K, you can sort of like position long evolve there. We're going to get a price discovery. And then above 66K, the same sort of scenario, although, yeah, it is a bit difficult to sort of like long vol on the upside, because the market really doesn't like pricing or like hitting vol when there's a price breakout. It's quite frustrating. But yeah, there's nothing much you can do there. But yeah, I think also ETH could also be like, maybe if you're looking for like, ETH could be the trade. I think that's still quite attractive as sort of like a vol trade, if you're looking for like yeah, like just long in vol. It might be the sort of better trade. You can actually already see here it does move a little bit more. So I would say that's where I would have my eyes on for sure.
Yeah, it's very interesting. Like Michael and I are saying opposite things, but the both of us could profit on our trades, right? Like what I'm saying is like buy front end vol, like front to middle of the curve vol, and delta hedge and just play the IV versus RV game. And what Michael is saying is just be a theta collector, like sell strangles, be comfortable with the 60 to 65K range on Bitcoin, and don't even bother about hedging deltas unless there's a break of the range. And as long as it stays in there, you're just comfortably assuming this bit of volatility risk and just collecting your premiums. Like both of us can make money, even though we're trading, we're doing the opposite trade.
I like it. 2 really strong trades. Great place to leave it. Excited to chat with you guys to see how things played out next week. And thanks. See you guys.